What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is May 15th of 2024. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, I want to spend some time to try to answer a big question, or really try to answer two key questions. One of them is not only whether or not we are going to continue seeing higher prices for Bitcoin, i.e. are we going to continue a bull market for Bitcoin, but beyond that, are we going to see an altcoin cycle? After this massive run-up in valuations in the market, while a lot of altcoins have done phenomenally well, many outpacing Bitcoin, we are still in a position where we have yet to see the altcoin cycle. And I want to talk about that, whether or not we could really see something like that, as well as a continuation of broader crypto valuations going into the year. We've got a lot to unpack here in today's video, so if you happen to enjoy it, consider dropping a like, and let's go ahead and kick things off. So I want to spend some time here to dive into a couple tidbits. I want to dive into price action, I want to dive into data science models, dive into some different indicators here. The first thing I want to talk about, above all, guys, is that at the end of the day, a lot of people have different opinions. A lot of people tell you whether or not Bitcoin's going up or down, and many people are really one-sided at the end of the day, whether it be their short-term or long-term perspective. They don't really have any nuance between those two. And for me, I try to kind of ignore those voices, because for me as a trader, I'm relatively adaptable. And I think you have to be that way if you're someone who is really trading their funds within the altcoin space and looking to make those major multiples. I don't think you're going to make life-changing returns to Bitcoin at this point, unless you've already got sizable amounts of money. The key thing here I want to go ahead and emphasize is that at the end of the day, I listen to price first and foremost. And when I look across the board, I'm still seeing what we've discussed here on this channel a lot for the past couple weeks. I'm seeing an inability to get above the 21-day for multiple weeks now, and us starting to get a lot more cozy with the 100-day moving average. Historically speaking, the closer that this 21-day gets to crossing the 100-day, there are very few opportunities where that has been a good buy the dip opportunity. To be fair, here in 2023, that was a period of time where it might have actually worked in your favor, and vice versa here when we got the red candle down 10% here when that 21-day was crossing through. Most of the times throughout history, when we go through actual bull market run-ups, we don't see the 21-day cross below the 100-day until we actually reach tops in the market, like we saw here in May of 2021 and here in November 2021. It's the same here as well, even with mid-cycle rallies. The crossing of the 21-day above the 100-day is really a great sign to start taking risk, whereas when we get a cross through, that can be a sign of stagnation and consistency in the trend and a further continuation to the downside. We see this here in 2017 with a much more clear build-up here, right? I think maybe here there might have been a slight cross, but otherwise that 21-day is generally holding where that 100-day is, and is holding up phenomenally well and outpacing it steadily. And when it crosses through there, that is a sign that risk on sentiment is starting to wane. So I again emphasize these moving averages. I know there's a lot of people who want to look at like 5-10 indicators, some people who really put a lot of passion behind, the MACD or the RSI, some of those more commonly known indicators. And some people try to belittle the moving averages, but ironically enough, the moving averages really get to the fundamentals of price. And they try to help determine how the broader sentiment of price is being demonstrated over a given period of time. So I look here at the weekly time frame because I want you guys to zoom out. I want you to take a look here. And what we see across the board, when we look across the indices, is we see the same thing. We see total, right? In this case, already having the 21-day within that 100-day pocket. If we just kind of zoom in here, take a look at the daily time frame, they are already mingling right now. That's look, I'm all about people mingling, but I don't want to see those indicators moving if someone's saying, hey, I should take risk in the market, or if I've got capital I want to expose, right? That does not make me want to go long on crypto here. And I take a look here at others as well. It's even worse. The 21 days is now trading actively below the 100-day pocket, right? So this is all indicative of a weakness in the trend, profit taking, distribution, and a sign that we probably have pain in the short term to come, right? Whether it be Bitcoin, whether it be altcoins, the broader crypto space as a whole. That's my key message here as we went back towards the beginning statement. We need to have a nuance between short-term and long-term outlook. Short-term, I think we got more pain to come, as we've been echoing for the past month. But beyond that, I think there is a bigger question at hand. Do we have the ability to be able to go upwards long-term? is this, the end all be all for crypto for the next couple of months, the next year, and we're really going to correct a lot of these gains? Or do we have greener pastures ahead after a nice flush down the market? Or maybe I'm even wrong. Maybe there isn't going to be a correction further from where we are now. I want to talk about those scenarios because, again, I don't want to speak here in absolutes. If we take a look at the data science models here, we can see that we're seeing a lot of historic tendencies repeating here. We came down into the accumulation zone on the MVRV Z-score for Bitcoin. We rallied up actually stronger than any mid-cycle rally that we've seen before, even better than the one into June of 2019, even better than to hear the revisit the prior all-time highs back in June of 2016, and also back here as well when we reached the same similar price point on the Z-score at around the 2-point range back in August of 2012. This is a significant level, this kind of 2.5 range. We overshot it a little bit this time and went all the way up here to 3.06. So I would not be surprised if this has got a little bit more of a ways to go here in the short term, again, playing at that point. But so far, we have not had, and this is one of the more consistent data science models. It's not like, and I don't mean to name names or bash or anything, it's not like regressive data science models like the stock to flow index, which a lot of people look at. Again, can be useful in some capacity, but the big thing above all is that it's not regressive. It's not constantly adapting and changing prices. This is a clear measurement of realized value and the actual market value of all Bitcoin in existence. And that gives us a very clear, concise measure that showcases we have not gotten that kind of typical 7 to 10 point rally where we get into this red zone here that has been consistently throughout history. When you get up towards that 7-point range, that's when you want to start taking profits. You want to start de-risking when everyone's starting to pile into the market. So I look for those that have really held the test of time. I also look here at the 2-year MA multiplier. Again, when we get in that green zone, that's your accumulation phase. Buyers did come in there yet again, albeit it spent a lot more time here. And we are still far away from reaching that 2-year MA multiplier. For Bitcoin, the resistance band, the 5x value from that 2-year MA here, or moving average. So there is showcasing clear points here in the data science models that there is an ability for Bitcoin to potentially run up. It's not a guarantee by any means. I'm just saying, historically speaking, data science models are not looking extremely overbought. And I think we can also feel that, right now we're not in that, crazy la-la land world where everything's just going parabolic and money is flowing in big time in the ETFs. We're not seeing that. So there is an opportunity to do so, right? And the same goes here with the altcoin season index when we look on the annual time frame and the year-long time frame, right? This chart showcases very clearly, for those who are claiming we've had an altcoin cycle, we have not had our altcoin cycle yet if we are going to get one. Again, when I make that statement, I want to make it very clear. I'm not saying we are going to have one, but for those who are saying we have had one, I would disagree pretty starkly with that. I think the numbers show very clearly that while people have made phenomenal returns in some altcoins, mind you, in the Memecoin space, we made great returns in Q1, making some pretty active trades coming back after a pretty passive year in 2023. There have been great opportunities to make money, and there will be even outside of altcoin cycles, but so far we have not seen that kind of parabolic blow-off top here in the markets. So again, above all, whether or not, I think one thing that I'm kind of summarizing here is not only having that short-term and long-term outlook, also looking at the data science models to see cues of whether or not we really are overextending, kind of keeping ourselves, and also price action as well as a kind of means of checks and balance. But the kind of closing here, I want to state here before we dive into some altcoin setups and looking for some value in the market and then diving into the macro sphere, is that above all, we need to make sure that we take a look at those kind of key data points like the data science models to reassure us that there is that potential for us to go higher, that we're not seeing historically overbought signs. But along with that as well, follow price. Let price be your guide here, guys. Whether or not we're going to get a kind of harsh correction here if we continue upwards from here, the game is so simple. Like at the end of the day, if you just really keep it to the basics here, whether or not you agree or disagree with me on the price direction call that I made here for the short term, or if you think we're just about to go sky high to new all-time highs, we're really not that far away, so it'd be possible to do that. Wait for a clear breakaway from the 21-day moving average. For me, I'd rather pay a premium waiting for Bitcoin to have a weekly close above 65K, above the prior resistance for the past couple of weeks, and really coming up close to the past month. well above the 21 day that signals, hey Nick, you were wrong on that short-term correction bet or the hopes of that. You're gonna have to pay a little premium. And I'm gonna sit there and be like, hey, that's cool, man. I'm in for the ride. I'm gonna wait to see. I'll get in, and I'll watch to see if there's some resistance at some of these prior highs or relative highs back here from early April or mid-March. But otherwise, I'm gonna be placing my bets in the market leaders, the plays that are outperforming Bitcoin on their BTC ratios, that are really outpacing their other competing altcoins to find the best market performers. And I'll ride with the trend. I'm not going to fight it. I've really leaned a lot more back into price action over the past, kind of 4 or 6 months, and that has been really my best guide here. Whereas if we break below that 100-day EMA, we got to be just as fair in that direction. And I'm here today to tell you guys, like, in the same way I'm trying to exhibit it here, the only way you are going to outpace markets long term, if you're swing trading and if you're trying to kind of do things on your own, you're not just passive investing or DCAing, which I can respect as well. You need to listen to what price is telling you, and you need to be fair in both directions. You cannot let bias get the best of you. And if we start breaking below that 100-day, after spending, mind you, like, I want to emphasize like a great way to kind of think about this here. Last time we came down to the 100-day, we spent less than 24 hours in the 100-day before continuing on to the next move. So buyers came in sharply at that range. That was the post-ETF launch correction. Institutions bought on a dip. They didn't buy at relative highs all the way since back here at this range in April 2022. They bought at a nice 18% discount, coming up on that 20% figure. Look at what's happening this time around. We come down the 100-day, we dip below it, spend a longer period of time below it, come up, still get shot down at the 21-day rather than getting above it and making it support. It's been weighing us down multiple times, and we are spending more than a week, the majority of the last week, in the 100-day pocket. Like, some people, beg to say, oh, this is looking bullish. Buyers are coming in, providing support the 100-day. What this shows to me is that the eagerness is not there, right? And that's really not up for debate so much at the end of the day. I don't mean to speak in absolutes again, but those signs are clearly showing within price. And I think it's pretty fair to say that while we're accepting that there could be a possibility we continue higher, there's that ability for Bitcoin to expand, and that we have yet to really see the euphoric period. I'm being kind of bullish in saying that there is that opportunity for that to play out. It is not guaranteed to happen over the long term, and more importantly, we need to focus now in the short term, because if you are holding positions right now, betting that this is the bottom, you better be prepared for some potential flush down. If you are overexposed and you can't stomach a 25, 30, 40, 50% correction in some of your plays, depending on which plays you're in, I don't think it's going to be that bad for most plays. But the altcoin sector could continue to get hit pretty hard here, with dominance levels being at 11.7%, and looking like it may not hold on the 200 week in a broader correction, potentially coming down to 9%. A lot of meme coins. A lot of plays are going to get hit, and I think you're going to find much better value entries in the market. And I think that people are going to start focusing on more valuable narratives in the space, focusing on stacks, for example, and Bitcoin-related infrastructure. I think new protocol-based infrastructure for big narratives and clear use cases are going to really take the center stage. But stacks right now, for example, as much as I love it, it's pulling back right now. It's going through a nice healthy correction here. And again, I think I'm going to be looking for this, at a range of prior testament in the past, right? This was prior resistance, these kind of top wicks here, right under about 3,000. So I'm going to be watching what happens when price gets in that range. This was also support back here at around 2,700 sats. I don't know if it's exactly 2,700 or 27,000, but you get my point here in the BTC chart. You see the level here that I'm highlighting around 2,700. This is the kind of range that I would maybe look for some value, see how price is reacting with that range. And we are already well below the 200-day here. RNDR, on the other hand, is one of the plays we've been watching that's really been holding up phenomenally well versus most of the market, but has taken a pretty big nosedive here the past couple of days as we revisited prior ranges of distribution and resistance. So my point here is that, we're going to see how it reacts with the 21-day, but I think that there's a good chance you come back in this pocket between the 100-day and the 200-day here, and get an opportunity to buy RNDR again at a discount, see how it holds up there. The big point above all, guys, is that while we have our clearly defined narratives here, we are waiting for that range to really make those kind of big moves here. But above all, it's important to have your plays ready here, and accepting that right now price is relatively weak, that there's that opportunity for prices to correct further. You want to be ready with capital on the sidelines, waiting to make that strike, to make that bet on kind of the next generation of plays in the market. And we're excited about Memecoins still. We're also interested as well in the Bitcoin infrastructure and in DePIN or AI plays like Render that are established and have a lot of great price action, that have consistently been performing well against Bitcoin. But I think as well we also need to keep our mind open to emerging narratives. I think we need to be prepared for the plays that no one's talking about right now, that are going to come in and service the market in ways we just can't predict right now, but we know are building fundamentally valuable things that are going to be useful in the sector. And I think one of the big things above all is, as always, as we've seen throughout prior moves in crypto, because it's a constant game of innovation, and it is one of the most fundamental things that's required for crypto and Web3, and that is infrastructure plays, L1s, layer 1 protocols. This for me is something that I think we have to keep on our radar as one of the big narratives we talked about. And I emphasize the topic of what I defined as secure L1s. Secure L1s are this narrative of focusing on fixing a lot of the key primitive issues of Ethereum, other EVM compatible chains, and all these new EVM forks that are coming out. They all have the same security vulnerabilities and issues of their predecessors. And they also lack a lot of the key things that are going to be necessary for the next wave of adoption to really come in. A lot of the necessary factors like privacy that need to be built in, as well as much higher degrees of scalability. Well, today's video, I want to spend some time to talk about a new partnership that we just launched. We launched a partnership with AZERO. This has been one of the protocols, as you guys can see, I've been chatting about for a long period of time. We've been chatting about Aleph for the past couple months here in this channel, and the Dash report, I think we've talked about it for nearly a year now. I've been really looking for those kind of next generation protocols, and very similar to Radix and Energy, I think that Aleph is in that class of those top tier L1s that has a completely different approach to many of its predecessors and is adding a huge value proposition. In this case, it's privacy. Now, not only does AZERO bring scalability to the market with its technology, but beyond that as well, it has a whole range of ecosystem projects that are already being built. It's finally hitting, in my opinion, that kind of S-curve where a lot of the hard work that's been going into AZERO from its core team and all the contributors over the past 2 to 3 years that I've really kind of known about the project has been finally coming in the forefront. And I don't see a ton of people talking about AZERO yet, but I'm seeing built up in traffic and traction around the project, more projects being built on it, and that to me is a really good sign, because I like to get into the ground floor, I like to get in when no one's talking about it, and when everyone's focused on all the current narratives of meme coins and all the kind of stuff that really, in my opinion, I think many people would agree aren't gonna last very long. There's one really big thing here that I want to bring to your guys' attention, and that is one of the key protocols or dApps that's going to be deployed within the AZERO ecosystem, probably one of the biggest projects, the equivalent of Uniswap in the Ethereum ecosystem, and that is CommonFi. Now, Common is the major automated market maker provider, or DEX, for the overall AZERO ecosystem. And the big thing about Common above all is not only is it a really well-established product, they have a really great team behind them that's going to be building a very similar and familiar experience of automated market makers for people who want to just do simple market buys. But beyond that as well, they're going to have limit order functionality like actual traditional centralized exchanges. And outside of that as well, they have the ability to have truly private transactions. I want to emphasize how important this is here to have aggregated private orders. When we're really talking about TradFi or traditional institutional liquidity coming into the space, they are going to want to have private transactions and private executions similar to an order book. I do not want to have to deal if I'm managing a $100 million hedge fund and I want to start building positions on digital assets, whether it be in protocol tokens like AZERO or in different types of utility tokens or tokenized securities or assets within the crypto space. I'm not going to want to have my public address, holdings, and my transaction orders being fully exposed at all times. And that's why it's very important to be able to have private orders, not to mention as well, obviously being able to do so in a non-custodial and decentralized way, and also be protected from things like sandwich attacks, which are going to leave you paying a higher rate or getting front-run by other participants in the market. So this is really cool that Common has all this built in and a whole range of other things that you guys should really dive into, not only from compliance and data protection, which is very important as well for anyone in Europe, like for any institutions, GDPR compliance, the right to be forgotten. These kind of things that may seem trivial are actually huge barriers for institutions. It is why so many projects can only deploy MVPs. Companies explore MVPs within the Eurozone and stuff, and then they don't really take it to production. This is going to really, I think, in many ways, bring a lot of liquidity and new participants in the space, and it really positions AZERO in a good space, as well as Common. Now there's the upcoming Common drop here, which is very important for you guys to keep on your radar. I'm going to leave a link down below in the description where you can learn about Common drops. It essentially is letting you know how you can participate in the Common drop, which is going to be probably one of the biggest drops that have been in the AZERO ecosystem, and I think is definitely one of the top ones you guys need to keep on your radar. It'll tell you all the details around AZERO participants and holders and stakers, around how you can participate within the Common drop and the multiple rounds that are going to play out, with all the details around how you can actually maximize participating within that drop and potentially benefiting from it as well. So I definitely recommend you guys not only follow Common as well as AZERO on Twitter, but go check out the details down below in the description around that drop. We're going to be doing a review on AZERO, where I'll probably talk a little bit about this as well, but we're going to be talking mainly about AZERO in the next video, talking about some of the key technological breakthroughs that it offers, why this is important, and also some of its bridging mechanism for bringing liquidity over into the ecosystem. So stay tuned for that. There's going to be a lot to unpack in the future videos. But above all, AZERO is definitely up there, guys, with a lot of the plays that I'm keeping on my radar. Again, I bring it here back to a price action perspective. At the end of the day, this is my genuine take on it. AZERO is like a lot of plays. It's the similar case here, what we've talked about with Radix, for example. It's ranging, right? It's going sideways. We're seeing this kind of accumulative period here. We're not seeing clear trend direction yet. But the great thing about it is that we can watch to see if that trend direction picks up, both for short-term moves, as someone who's a short-term trader as well. I like that, but also as well for longer-term setups, right? I'm just waiting to see how price is going to interact with that 21-day moving average. We had a nice breakout here the other day, right? We're seeing, again, that whereas the price was really starkly far away here in the 21-day, having a clear downtrend, we're now starting to see that potentially buyers are coming in a similar range here to the past. So that's the big thing above all, guys. I'm not here to tell you guys you have to go buy an AZERO, but my point here is I want to, again, apply this here in the same perspective we talked about with Render, we talked about stacks. We want to be looking for those accumulative patterns, and we can even see now that AZERO is starting to outpace BTC as well. If you look at the BTC pair on Bitfinex or build custom ratio for it. So this is, again, important stuff above all. You want to make sure that the plays you're watching at a minimum are outpacing Bitcoin. You want to make sure that you're tapping into narratives that are new and fresh, that really have that ability to kind of maximize and realize new value in the market. So that's an important tidbit to keep in mind here. And I know a lot of people as well have got another big question on their mind, and that is, asking about, what's going on with Gamestop stock, what's going on with AMC. All the meme stocks are coming back to the forefront. GME here, I'm so irritated. I gotta tell you guys a funny story here. I swear on my soul, you guys know here, I talk about when I get my moves right and I get them wrong. Technically speaking, this is kind of one of the scenarios where I did both. I was watching GME here. I swear there weren't many stocks that I was looking to trade. I was even looking to potentially buy like a couple calls, back here. And it wasn't because I thought that, we were going to get this kind of move here. I thought we were just coming up to test like, the 200 week, which we did technically here before really Roaring Kitty, or basically the guy who started the whole Memecoins stock craze, started to tweet, and that sparked this whole move. Again, I above all would probably have been much more upset even if I took the trade here and closed it. I bet I would have closed it at this 200 week with the fade here on this candle, and I probably wouldn't be able to sleep with myself that I would have sold it. Even though I probably would have made some great money, I probably would have not been able to sleep with myself knowing how much more I would have made, considering it went up to these levels. So I didn't end up taking the trade, unfortunately, but also probably for my sanity as well. Probably best that I didn't. These things are completely unpredictable here. You can see here that, we were up around 391% since the recent lows. It went as high as 550%, and really cut back, a ton of years worth of downward move. This pretty much took us back to where we were in December of 2021, back at the peak. So I have to tell you guys, a lot of people have been looking at this and they're starting to think that, hey, maybe this is a sign that risk taking is back on the table, that meme coins are about to start taking off again. It's time to get into altcoins. And I would say to heed caution, guys, because above all, it's again not about picking a bottom. It's about trying to determine whether or not price is showing you the signs of risk taking here, right? That breakout above the 21-day, right? That's kind of your cue for trend direction. And I take it back here to talking about Bitcoin, take it here to talking about, stocks or any other kind of altcoins we're talking about, even just others as well, right? Just wait until it gets above the 21-day. If it can't get above that 21-day, then you have an inability, not you particularly, but the market has an inability to continue trending higher, right? And it's a very low threshold to set that price and valuations are above the value where they were 21 days ago. So if we're not even ticking that box off, for me, I'm heeding caution. I'm not really, going, supersonic into building positions, so to speak. I'm not FOMOing it. I think that it's great to see this kind of move here in some of these plays. It's great momentum trade opportunities where you can make a lot of money if you know how to get in and get out. But above all, I think this is just kind of the activity we're seeing here towards kind of peak euphoria. And it leads me to be a little bit more skeptical, both short-term and long-term, when I see this kind of stuff, because when I look at NVIDIA, all right, I look at the long-term chart here, really over the almost coming up on the last decade, we have this consistent line of resistance with the prior two highs in the past, and I think that there's a good chance NVIDIA comes up for the big even test of new all-time highs of $1,000. I think you're going to see this kind of blow-off top move in AI. A lot of people are really euphoric and excited about it with some of the recent announcements from OpenAI and Google. The race is, so to speak, heating up here, the AI race. And I think that we're going to eventually realize, as much as there's a lot of these new technological breakthroughs and exciting narratives, markets trade on future news. And if people start to get the feeling that GPU demand is not going to be there, that these names are going to start slowing down when it comes to the innovation that they're bringing, then the stock will start to correct as well. So just keep that in mind here, above all, guys. And I see the same here. I see a good short-term swing trade opportunity, like a nice euphoric blow-off top in SMCI, NVIDIA. There's also some other card makers as well in the GPU space. But of all, those are really kind of the two that I would like to trade personally. And yeah, I'd be taking profits on any kind of significant upward move towards those kind of resistance ranges of the past, and kind of take profits even more aggressively as we would break to new highs. I think we're getting towards the tail end of this move here, and I really wouldn't want to be stuck holding any position for a significant period of time after this 800% move we've had at NVIDIA. It's been on a great run. It's seen great expansion in its fundamentals, but the question is whether or not that's going to be sustainable. Will there be that continuous pickup of demand for GPUs? Time will have to tell here. But we rambled on a good amount here, guys. Covered some good ranges of topics, but really coming back to that old fundamental point that price action is vital. Price action is vital to continue a trend forward. And we can look at our data science models. We can look at whether or not the ETF inflows or outflows are looking good. It all comes back to market price. Spot price is what determines the value. And if there's more market outflows when it comes to market orders than there are market inflows, so more people willing to market sell than market buy, is a fundamental principle that is going to drive prices lower, and vice versa. If market buyers start to show up, if we start getting above that 21-day, the trend starts to cusp up again, we can make it support. That might be your cue to start taking risk again. But until then, we're sitting patiently, we're watching, and we're getting ready with our money, with our research, to make those executions when the time is right into some of those plays that are exciting us the most. As we go below the 200-day on some plays, as we come back into the pockets of previous value in the past, that is where we're going to start striking when no one is willing to buy. So that's it for today's video, everyone. Thank you all so much for watching. As always, I rambled on a good amount. If you guys enjoyed this video, consider dropping a like. It's a great way to support the channel. And one quick tidbit, I meant to mention it earlier, but if you guys are interested, Russ is going to be doing a video later on today. He's going to be covering the post-CPI analysis of one of the big inflation metrics. They're the consumer price index. And he's going to be doing a good macro outlook leading into probably crypto and equities and trying to really break down what the CPI reading means going forward for monetary monetary policy and a whole range of stuff. So definitely check that out, guys, for more of a macro video. But again, if you enjoyed this video, consider dropping a like. I'll see you guys in the next video on Monday. Have a great weekend, guys.